Stop whatever you are doing. Put down your sandwich, pull your car to the side of the road. Listen to me very carefully, because the death warrant of the global economy has just been signed. On January 3rd, when the United States moved into Venezuela, everyone said the game was over, that the US won. They were wrong. The game isn't over. The game has just begun, and Beijing has just flipped the table. According to leaks coming directly from sources in Washington, information that has not yet hit the mainstream media, the People's Republic of China has, as of 9 a.m. this morning, officially halted all strategic metal exports to the United States. Do you know what this means? This means the plug has been pulled on Apple. This means Elon Musk's worst nightmare has just come true. But most importantly, this means that if you do not have physical silver in your pocket or your safe right now, you will never be able to buy it at a cheap price again. The supply chain has snapped. The shortage is official, and the panic starts now. You need to understand the gravity of the situation. This is not a drill. This is not some speculative YouTube clickbait. I am holding the internal memo, translated from Mandarin, that is currently circulating in the panic rooms of the Pentagon and the boardrooms of Silicon Valley. While you were sleeping, while the sheep were watching Netflix and worrying about the Super Bowl, the geopolitical tectonic plates shifted. The world you lived in yesterday is gone. It evaporated the moment the Shanghai Gold Exchange opened this morning. Let's go back to the trigger. January 3rd, the U.S. military secures the Orinoco Belt in Venezuela, 300 billion barrels of oil. The establishment cheered. The neocons popped champagne. They thought they had secured energy independence for the next century. They thought they could bully their way back to hegemony. But they forgot one thing. They forgot that we are no longer living in a world where oil is the only god. We are living in a technological age, and the god of technology is not oil, it is metal. China didn't respond with aircraft carriers. They didn't send destroyers to the Caribbean. They didn't fire a single shot. Why would they? Sun Tzu said the supreme art of war is to subdue the enemy without fighting, and that is exactly what they did. They looked at the U.S. economy. They looked at the Green New Deal. They looked at the bloated, high-tech U.S. military, and they identified the single critical point of failure, the Achilles heel: silver, lithium, rare earth elements.
This morning, the Ministry of Commerce in Beijing invoked Article 4 of their export control law. They didn't just raise tariffs. They didn't impose a quota. They issued a total export ban on the grounds of national security. Do you understand the lethality of this move? This is a kinetic strike disguised as trade policy. This is an economic nuclear bomb dropped right on top of American industry. Let me take you inside the war room. Let me tell you what is happening right now, this very second, at the Tesla Gigafactory in Texas. You think Elon Musk is tweeting memes today? No, he is screaming at his supply chain directors. Because Tesla, like every other modern manufacturer, operates on a just-in-time inventory system. It's an efficiency cult. They don't keep months of silver inventory. They don't keep years of neodymium magnets in a warehouse. They keep days, maybe weeks. Silver is the most conductive metal on Earth. It is not optional. You cannot build an electric vehicle battery without it. You cannot build a solar panel without it. You cannot build the circuit boards that run the F-35 fighter jet without it. China refines over 80% of the world's strategic metals. They control the bottleneck. By closing that valve, they have effectively put a countdown clock on the American economy. 48 hours. That is the rumor on the street. That is the timeline before the major assembly lines at Raytheon and Lockheed Martin have to start rationing production. Imagine that. The United States of America, the greatest military power in history, unable to build guidance systems for its missiles because Beijing decided to keep its metal. This is a siege. This is a blockade. And you are stuck inside the castle walls with a leadership class that has sold off all your supplies. Now, look at the markets. This is where the crime of the century is taking place, right in front of your eyes. Turn on CNBC. What do you see? You see the spot price of silver hovering around $24 or $25. Maybe it's up 1% or 2%. The talking heads are saying there are some supply chain concerns, but inventory is robust. Liars, traitors, they are gaslighting you while the house burns down. The spot price you see on your screen is a fiction. It is a digital hallucination created by the Comex futures market. It is a price for paper contracts, for digital promises that haven't been backed by real metal since the 1980s.
I want you to try something. Right now, pause this video if you have to. Pick up the phone. Call a major bullion dealer. Call ApeMax. Call JM Bullion. Call your local coin shop. Ask them to sell you a monster box of silver eagles at the spot price. Go ahead, I'll wait. They laughed at you, didn't they? Or they told you, sorry, we are out of stock. Or maybe, if you were lucky, they told you the price is spot plus $15, spot plus $20. Why? Because the paper price and the physical price have divorced. The marriage is over. In the real world, the world where physics matters, not finance, silver is already trading at shadow prices that would make your head spin. We're hearing reports from the black market in Hong Kong and Singapore of industrial buyers paying $100 an ounce for immediate delivery of 1,000-ounce bars. $100 an ounce, today, not next year, today. But the Comex won't show you that. The banking cartel, JP Morgan and the rest of the vampire squid, they are terrified. They are short billions of ounces of silver that they do not have. If the official price reflects reality, if the price on the screen matches the price on the street, they are insolvent, they are bankrupt, they are dust. So they are fighting for their lives. They are printing paper contracts, naked shorts, throwing them into the market to suppress the price, hoping to scare you out of your position, hoping you will look at the red arrow on the screen and sell your real metal for their fake currency. Do not fall for it. This is a bear trap of historic proportions. The vaults are empty. Look at the registered category on the Comex. This is the silver that is actually available for delivery. It has plummeted to historic lows. It is a ghost town in those vaults. There are cobwebs in the corners where stack after stack of silver bars used to sit. China knows this. Russia knows this. Why do you think they have been buying gold and silver hand over fist for the last 10 years? They were preparing for this day. They were draining the West of its real wealth in exchange for cheap plastic goods and treasury bonds that they are now dumping. We are witnessing the end of the fiat currency experiment. The dollar is backed by faith and credit, but you can't build a missile with faith. You can't build an iPhone with credit. You need the physical material. When the supply shock hits Main Street, and it will hit, likely within the week, you are going to see shortages that make the 2020 toilet paper panic look like a picnic.
Think about the implications for the defense industry. Raytheon, the maker of the Tomahawk missile. Each one of those missiles contains roughly 15 kilos of silver. It's in the solder, the wiring, the guidance chips. Where does Raytheon get its refined silver? Until this morning, a significant portion came through supply chains originating in China. Now, it's gone. The Pentagon is currently scrambling. We have reports of emergency meetings at the Department of Defense. They are realizing that their entire high-tech arsenal is dependent on the enemy they are trying to contain. It is strategic suicide, and the only way they can get that metal now is to confiscate it. Yes, you heard me. Confiscation. History doesn't repeat, but it rhymes. In 1933, FDR confiscated gold. Why? Because the government was broke. Today, the government isn't just broke financially, they are broke materially.
They need the silver for the missiles, for the green energy transition, for the very infrastructure of the surveillance state. Do you think they're going to let you sit on a pile of it while their factories idle? This is why I have been telling you to get your metal out of the system. If it is in an ETF like SLV, you don't own it. You own a claim on a counterparty that is currently drowning. If it is in a bank safety deposit box, you don't own it. You are renting space in the belly of the beast. If you can't hold it, you don't own it. It is that simple. The psychological war is intensifying. The media is going to start spinning this narrative. Tomorrow, you will see headlines blaming hoarders and speculators for the shortage. They will paint you, the prudent investor, as the villain. They will say you are harming national security by holding silver. That is how you know we're winning. That is how you know the squeeze is working. Let's look at the math. It is brutal and it is beautiful. Global annual silver production is roughly 800 million ounces. Global demand was already exceeding 1.2 billion ounces before this ban. We were already in a structural deficit. The world was eating into above-ground stocks for years. Now, remove China's exports, remove the refinery capacity. The supply curve hasn't just shifted to the left, it has been decapitated. Meanwhile, demand is vertical. If you are the CEO of Samsung or Apple and you see this news, what do? You panic buy. You buy every ounce you can find at any price. Price is no object when the alternative is zero revenue.
This creates a super spike, a vertical move in price that destroys the short sellers. The banks, the shorts, are currently staring into the abyss. They are on the wrong side of the most violent trade in history. They have sold promised silver to thousands of investors. What happens when those investors stand for delivery? What happens when the industrial users stand for delivery? The Comex declares force majeure. They settle in cash. They will send you a check for the paper price. Here is your $25. Thank you for playing. Meanwhile, the real metal is trading at $200, $300, maybe $500 an ounce on the street. And your check is worthless because hyperinflation is eating it alive. This is the trap. The 3rd of January was the bait. The U.S. took the oil, thinking it was a power move, but they walked right into a kill zone. China waited until the U.S. was overextended, distracted, and arrogant, and then they cut the tendon. I need you to visualize what the next few days look like. Apple stores running out of inventory, Tesla delaying deliveries indefinitely, the stock market crashing as the tech sector, which is 30% of the S&P 500, realizes it can't produce its products. And amidst this chaos, silver and gold will be the only things standing. Not Bitcoin, not real estate. When the supply chain breaks, the only thing that matters is the raw material. The window of opportunity is closing. It is not closing in weeks, it is closing in hours. The online dealers are already overwhelmed. I'm seeing site crashes on the major bullion sites. The traffic is spiking. The smart money is moving. The billionaires are not buying stocks today. They are buying mines. They are buying vaults. They are getting ready for the Great Reset, but not the one the globalists planned. This is the reset of reality, the return to tangible assets. We are about to enter the eye of the storm. In the next section of this report, I am going to show you the specific document, the red notice that was sent to the Chinese port authorities. I'm going to break down the specific legal language that makes this ban permanent. And I'm going to expose the desperate, secret plan that the Federal Reserve is cooking up right now to bail out the bullion banks before they collapse and take the entire financial system down with them. You think $17 billion in repo loans was a lot? Wait until you see what they are planning next. It involves your pension fund. It involves your bank deposits. Stay with me. Do not go anywhere. The battle lines are drawn, and you need to know where the landmines are buried.
Let's look at the document. I have it right here on the screen in front of me. This is not a press release.
This is not a public statement meant for the consumption of the Western media. This is a leaked internal directive from the General Administration of Customs China, or GACC. It is labeled Notice 2026-03, Priority Level Red. The subject line translates roughly to immediate cessation of strategic resource outflows to hostile entities. Notice the language they're using. Hostile entities. They're not calling the United States a trading partner anymore. They're not calling us a competitor. They're classifying the entire U.S. economy as a hostile target. Clause 4, subsection B is the smoking gun. It explicitly lists HS code 7106, which is silver, unwrought or in semi-manufactured forms, alongside HS code 2805, which covers rare earth metals like neodymium and dysprosium. The directive states that effective immediately, any vessel carrying these materials bound for a U.S. port of entry is to be halted, inspected, and the cargo seized for National Strategic Reserve reallocation. Do you understand what reallocation means? It means they are stealing it back. It means the silver that was already paid for, the silver that Apple and Tesla thought was on a boat heading to California, is now being offloaded back into government warehouses in Shanghai. This is theft on a sovereign scale. But who is going to stop them? The World Trade Organization? The WTO is a toothless tiger. The UN? China has a veto. There is no police force to call. This is the law of the jungle, and the biggest predator just decided to eat your lunch. The implications of this specific document are terrifying because of the timeline. Shipping logistics operate on a delay. The silver that arrives in Long Beach today left Shanghai 3 weeks ago. That flow is still trickling in, but the pipeline has been cut at the source. This means we have a phantom supply. For the next 2 weeks, things might look normal. Trucks will arrive, factories will get their deliveries, but then suddenly there will be an air pocket, a void. The ships arriving in February will be empty, and that is when the real chaos begins. That is when the factory manager at the Tesla Gigafactory goes to open the vault and finds nothing but air. This is the Wile E. Coyote moment for the American economy. We have run off the cliff, but we haven't looked down yet. We are suspended in mid-air, fueled by the momentum of past shipments. But gravity is undefeated, and when we look down, probably around next Tuesday, the fall is going to be vertical.
Let's talk about the logistics nightmare that is unfolding behind the scenes at the major shipping companies. My sources at Lloyd's of London, the insurance giant that underwrites maritime risk, tell me that as of this morning, war risk premiums for vessels carrying strategic metals from Asia to the U.S. have spiked by 400%. Why? Because the insurers know what is coming. They know that the U.S. Navy might try to interdict these ships. They know that China might seize them. The ocean is no longer a highway. It is a contested battleground. Maersk and MSC, the biggest container lines in the world, are already quietly diverting ships. They are not going to risk their billion-dollar vessels getting impounded in a trade war. So what are they doing? They are offloading U.S.-bound cargo in friendly neutral ports like Singapore or Vietnam. But here's the catch. The silver is stuck there. It is sitting in a warehouse in Singapore, thousands of miles away from the factories in Detroit and Silicon Valley that need it to survive. You cannot teleport silver. You need a secure chain of custody, and that chain has been shattered. Now connect this to the corporate sector. I mentioned Apple and Tesla, but they are just the tip of the iceberg. Think about the medical device industry. Silver is antimicrobial. It is used in catheters, in wound dressings, in surgical equipment. Think about the water purification industry. Silver ions are used to filter water. Think about the solar industry. Every single solar panel on a roof in Arizona contains about 20 grams of silver. The Biden administration wants to cover the country in solar panels. With what metal? If China holds the line on this ban for 90 days, the entire green energy transition collapses. It is dead on arrival. You cannot build a green economy without the red dragon's metal. It is a mathematical impossibility, and Beijing knows this. They have calculated the exact burn rate of US industry. They know exactly how much inventory we have, because they're the ones who sold it to us. They have the ledger. They know we are running on fumes. And while the industrial titans are panicking, the financial system is beginning to crack under the pressure. I told you about the $17 billion repo spike in the first part of this report. Now let's dig deeper into why that happened. You need to understand the concept of the margin call from hell.
The bullion banks, the 8 largest traders on the Comex, operate with massive leverage. For every ounce of physical silver they hold in their vaults, they sell 100, maybe 200 paper ounces on the exchange. They do this to collect fees and to manipulate the price. It is a confidence game. It works as long as nobody asks for the real metal. It works as long as the price stays stable. But when the price gaps up, when it moves violently higher because of a supply shock like this, the math blows up in their faces. Every dollar that silver rises creates billions of dollars in losses for these banks. But these are not just paper losses anymore. The exchange demands cash collateral. This is called variation margin. Every night, the computer calculates the loss and demands a wire transfer to cover it. If the bank cannot send the wire, they default. And if they default, they are liquidated. The $17 billion we saw this morning was the Federal Reserve stepping in to pay that margin call on behalf of the banks. Think about how sick that is. You, the taxpayer, are effectively bailing out the very banks that have been suppressing the price of your silver for decades. They made bad bets, they got caught short, and now the Fed is printing money to cover their losses so they don't go bust. But here is the trap they are in. The Fed can print dollars to pay the margin, but they cannot print silver to satisfy the delivery. The person on the other side of that trade, the person who bought the contract, sees the news from China. They see the export ban. Do they want the cash settlement? No, they want the metal. They are standing for delivery. This is the force majeure scenario. Force majeure is a legal clause in the Comex rulebook. It allows the exchange to suspend trading and settle contracts in cash if delivery becomes impossible due to acts of God, war, or government action. The Chinese export ban is the perfect excuse. I predict that within the next 72 hours, the Comex will declare force majeure. They will say, due to the Chinese embargo, we cannot source enough 1,000-ounce bars to fulfill our obligations. Therefore, all open contracts will be settled at the last traded price. This sounds like a solution, but it is actually the death knell of the market. If they settle in cash, they are admitting that the paper contract is worthless. They are admitting that the Comex is not a delivery market, but a betting parlor. The moment they do that, the link between the paper price and the physical price is severed forever. The paper price might settle at $28 or $30, but the physical price, the price to actually get a bar of silver in your hand, that will go to the moon. We will see a bifurcated market, a two-tiered system. The official price, which is a lie, and the street price, which is the reality. We saw this in the Soviet Union. The official exchange rate for the ruble was one thing, but on the street it was totally different. We are turning into a Soviet-style economy where shortages and black markets define the price of everything. And don't think for a second that the banks don't have a plan B. They are treacherous, and they are already moving to the next phase of the heist. We are hearing whispers of a new financial product being rushed through the SEC right now. They are going to call it a synthetic silver bond. The idea is to sell you a bond that is tied to the price of silver, backed by the US Treasury, to discourage you from buying the actual metal. They will offer you a yield. They will say, give us your dollars, we will give you 5% interest plus the appreciation of silver. Do not touch it. It is a trap. It is a way to soak up the demand without delivering the metal.
They want to divert the capital that is rushing into the physical market back into the paper casino. They are terrified that if you buy physical, you will drain the last remaining ounces from the system. They need you to keep in the digital pen. They need you to keep in the matrix. Let's look at the vault data again, because the deception there is subtle and dangerous. The Comex report lists two categories of silver: eligible and registered. Registered is the silver that is ready to be delivered. It has a warrant attached to it. That pile is tiny. It is less than 30 million ounces. That is barely enough to supply 1 month of U.S. industrial demand. The other pile, eligible, is much bigger. It is hundreds of millions of ounces. The banks point to this and say, look, there's plenty of silver. But that is a lie. Eligible silver is not for sale. It belongs to private investors, family offices, and maybe even you if you store your metal in a Comex-approved vault. It is stored there, but it is not available to the market. However, in a crisis, the rules change. There is a clause in the custody agreements that most people never read. It allows the custodian to rehypothecate or borrow the assets in the vault to cover liquidity shortfalls. This means the banks might be planning to dip into the eligible pile to satisfy the delivery demands. They might try to use your silver to bail themselves out.
This is why the mantra, "If you don't hold it, you don't own it," is not just a catchy slogan. It is a legal reality. When the music stops, and it is stopping right now, the only person who owns the silver is the person holding it. Everyone else is just an unsecured creditor of a bankrupt institution. The contagion from this silver shock is going to spread faster than anyone anticipates. It is not just about the metal, it is about the collateral. You see, silver and gold are used as Tier 1 collateral in the banking system. When the value of that collateral becomes uncertain, when nobody knows if the metal actually exists, the lending stops, the repo market freezes. This is exactly what happened in 2008 with mortgage-backed securities. Nobody knew which bonds were toxic, so they stopped lending against all of them. Today, the toxic asset is the unallocated silver account. Banks are looking at each other with suspicion. Bank A knows it doesn't have the silver. It suspects Bank B doesn't have it either, so Bank A stops lending to Bank B. The liquidity dries up, the credit crunch begins, and suddenly interest rates in the real economy spike. Your credit card rate goes up, your mortgage rate goes up, small businesses can't get loans. The Chinese export ban is the pin that popped the everything bubble. It exposed the fact that the Western financial system is built on a foundation of paper promises, while the Eastern system is building a fortress of real assets. China has been preparing for this for a decade. They launched the Shanghai Gold Exchange to compete with the Comex. They launched the Petro-Yuan to compete with the petrodollar. And now they have launched the silver embargo to destroy the U.S. industrial base. It is a masterstroke of economic warfare, and our leaders in Washington are asleep at the wheel. They are still talking about sanctions and tariffs, fighting the last war, while Beijing is fighting the war of resources. I want you to pay close attention to the behavior of the mining stocks today. The junior miners, the companies that actually have the metal in the ground, are acting very strangely. They are not just going up, they are being acquired. We are seeing massive block trades.
Someone is buying entire companies. I suspect it is the tech giants. If you are Apple and you need silver and the market is dry, what do? You buy a mine. You vertically integrate. You go to the source. We are about to see a bidding war for the raw resources. This will drive the valuation of these assets to levels that seem insane today, but in a hyperinflationary collapse, nothing is insane. The price of a loaf of bread in Weimar Germany was 1 trillion marks.
The price of a silver ounce could be thousands of dollars, not because silver is magic, but because the dollar is dying. The Fed knows this. The $17 billion injection was just the first shot of morphine. The patient is terminally ill. They are going to have to inject more, trillions more. They will print money to buy the bonds. They will print money to bail out the banks. They will print money to subsidize the miners. And all that new money will chase the same shrinking pile of physical goods. This is the definition of a crack-up boom. The economy collapses, but prices skyrocket. It is the worst of both worlds, stagflation on steroids. And the only lifeboat is the one that has been used for 5,000 years, gold and silver. You might be thinking, surely the government will intervene. Surely they will release the strategic stockpile. Let me tell you a secret that will keep you up at night. The United States strategic silver stockpile was sold off decades ago. It is gone. We used to have billions of ounces. We used it to make coins. We sold it to keep the price down. Today, the cupboard is bare. There is no cavalry coming over the hill. There is no reserve to flood the market. We are naked. When the panic hits the general public, when the average person on the street realizes that their money is losing value by the hour, they will rush to buy anything tangible. They will buy cars, they will buy land, they will buy food. But the smartest ones, the ones who understand history, will try to buy gold and silver, and they will find the doors locked.
The dealers are already rationing. I spoke to a wholesaler an hour ago. He told me he is only selling to long-term clients. If you are a new customer, he won't even pick up the phone. The drawbridge is being pulled up. The insiders are securing their positions. The outsiders are being left to drown. This is why I'm speaking to you with such urgency. We are in the final minutes of the game. The whistle hasn't blown yet, but the players are leaving the field. If you are still sitting in cash, you are holding a burning match. You need to trade that paper for something real before the fire reaches your fingers. In the final part of this report, I am going to give you the playbook. I am not just going to tell you the problem, I'm going to give you the solution. I'm going to tell you exactly which assets to look for, how to spot the fake paper silver scams that are about to flood the market, and how to secure your wealth when the banking system goes dark. Because that is the next step. Bank holidays, capital controls, limits on how much cash you can withdraw. It is coming. The leaked documents hint at it. The Emergency Economic Stabilization Act of 2026 is already drafted. It is sitting in a drawer in the Treasury Department, waiting for the right crisis to be unveiled. This silver shock is that crisis. Prepare yourself. The data is clear. The trend is irreversible. The East has made its move. The West is scrambling, and you are caught in the crossfire. But if you are smart, if you act now, you can turn this crisis into the greatest opportunity of your life. The storm is here, the shelter is built of silver, and the door is closing.
This brings us to the endgame. We are no longer talking about market correction. We are talking about regime change. Not political regime change, monetary regime change. The Emergency Economic Stabilization Act I mentioned, it isn't designed to save you. It is designed to save the system from you. When the banks close on a Friday afternoon, ostensibly for a holiday or a technical upgrade, that is the signal. That is the moment the gate slams shut. When they reopen on Monday, your dollars will be worth less and your access to them will be restricted. So, what is the play? How do you survive when the most powerful entities on Earth are conspiring to confiscate your purchasing power? First, you must identify the traps. As the silver shortage goes from acute to terminal, the government and the banks will launch a counteroffensive. They will not come for your silver with guns. That is too messy. They will come for it with lies. Watch for the launch of Patriot Silver Bonds or Strategic Resource ETFs. They will market these as a patriotic duty. They will say, invest in America's supply chain, guaranteed 10% yield. Do not sign the paper. These instruments are designed to vacuum up the capital that would have gone into physical metal and divert it into the debt black hole. It is a synthetic silver scam. They will take your dollars, spend them on bailing out Raytheon and Tesla, and give you a digital token that tracks a manipulated price index. When the real repricing happens, when silver hits 3 digits, they will default on those bonds or pay you out in worthless fiat currency. The second trap is the CBDC, the central bank digital currency. This is the ultimate goal. The silver crisis provides the perfect excuse. They will say the paper dollar is unstable because of speculators. We need a modern, stable digital currency to secure the supply chain. FedCoin is not money. It is a surveillance tool. If you sell your silver for FedCoin, you are trading freedom for a digital prison cell. They can track where you spend it. Negative interest rates can erode it, and if your carbon footprint is too high, they can turn it off. Physical silver is the antidote to the CBDC. It is private, it is anonymous, it is the final frontier of financial liberty.
Now let's talk about the price, the numbers. Everyone asks me, John, how high can it go? $50? $100? You are thinking too small. You are still thinking in terms of the pre-2026 system. You are thinking in terms of dollars. Stop measuring silver in dollars. The dollar is the thing that is dying. You don't measure a life raft by how much water is sinking around it. You measure it by its buoyancy. But if you want a target, look at the 1980 high. Adjusted for real inflation using the 1980 metrics, not the fake CPI numbers they feed you today, silver hit the equivalent of $600 an ounce. That was in a world with more supply and less industrial demand. Today, we have less supply, an exponential explosion in industrial demand, AI chips, EVs, solar, military, and a global currency collapse. $100 is a conservative pit stop. $100 is simply the price where the media starts paying attention. The real price discovery happens when the Comex defaults, when the paper price is deleted and the physical price takes over. At that point, the price is whatever the holder says it is. It becomes unobtainium. You want my ounce of silver? I don't want your dollars. I want your land. I want your services. I want real value. The strategy: fortify your position. Physical is king. If you still have cash in the bank, you are bleeding. Every day you wait is a day you lose purchasing power. Convert your excess fiat into physical metal immediately. Focus on low-premium bullion. Do not buy fancy collector coins with high premiums. You want weight. You want 1-ounce rounds, 10-ounce bars, 100-ounce bars. You are buying raw material, not art. Fractional for barter. Get some junk silver, pre-1964 US quarters and dimes. Why? Because when the dollar collapses, you won't be buying a loaf of bread with a 100-ounce bar. You need small denominations. Junk silver is the ultimate survival currency. It is recognizable, it is trusted, and it is fractional. Hold the line. This is the hardest part. When silver hits $50, you will feel rich. You will be tempted to sell and buy a new car. Don't. That is exactly what they want. They want to shake the weak hands out of the market before the real move to $200 or $500. Remember why you bought it. You didn't buy it to get more dollars. You bought it to escape the dollar.
Only sell if you are exchanging it for another hard asset, like real estate or a business that produces cash flow.
Ignore the volatility. The banks will try to crash the price one last time. They might dump 1 billion paper ounces at 3 a.m. on a Sunday to trigger stop losses. If the price drops $5 in a minute, do not panic. Laugh. Smile at their desperation. That is the death throe of a dying beast. Use it as a buying opportunity if you can find any metal left to buy. The wealth transfer. We are witnessing the greatest transfer of wealth in human history. For 50 years, wealth has moved from the workers and the savers to the bankers and the printers, from Main Street to Wall Street. The pendulum is swinging back. China's export ban is the force that broke the mechanism. The flow is reversing. Wealth is moving from those who hold paper to those who hold things, from the financial economy to the real economy. You are on the right side of history. You are on the right side of the trade. The Great Reset is happening, but it's not the one Klaus Schwab wanted. It's the one the market demanded. It is a reset to sound money. The $17 billion bailout this morning was the white flag. The elites know the game is up. They are looting the treasury on their way out the door. They are buying gold. They are buying farmland. They are building bunkers. They are doing exactly what I am telling you to do, but they are hoping you stay asleep long enough for them to get all the supplies first. Don't let them. Wake up. Look at the document. Look at the empty vaults. Look at the desperation in the eyes of the central bankers. The supply shock is here. The chain is broken. The blockade is active. The era of abundance is over. The era of scarcity has begun. And in an era of scarcity, he who holds the silver holds the power. Secure your future, protect your family, and for God's sakes, get your metal in your hand before the close of business today. Because tomorrow, that buy button might just be grayed out. This is the end of the paper empire and the beginning of yours. I'm John A.G. The signal is clear. Over and out.